Yes, hello everyone. Welcome to this brand new video on my channel. And in this one, we're going to be looking at imbalances. Now, what I've got on screen right now is literally one of the posts I put on Instagram recently. And based on the feedback of that, I honestly got so many messages asking, can you do a video about imbalances soon? Now, for me personally, once I actually learned imbalances within smart money concepts, it was genuinely one of the features of the markets that I never really opened my eye up to previously. Understanding the actual value of it. I would understand that, okay, yes, there's an imbalance in the market, but what does it actually mean? And the way I want to discuss it is how can we actually use it potentially as entry points and also for take profit areas. Now, there's actually sort of a difference in the market. When you understand imbalances to higher level and you've seen it so many times in the market, you know how things play out. It can actually help so much to even increase your win rate, knowing when to take profits and everything like that. But yeah, guys, before we get into it, I honestly never asked this. I've never really asked this before, but please like, comment, subscribe, everything. All of that, it helps with the growth and everything. And obviously now we've hit 25K subscribers, so things are moving quite nicely here. But yeah, guys, if you have any questions, definitely don't hesitate to, where is it? To reach out to my Instagram. Yeah, definitely reach out to my Instagram, send a message through, and then whenever I've got time, I try to go through them as much as possible. But yeah, guys, let's just get straight into it. Now, in terms of imbalances, what I'm going to be using is one of the lessons from my actual course. Of course, you guys know I've got the community and everything like that. If you are interested, we'll be talking about that in just a bit. But in terms of voids and imbalances, first of all, what are they? Now, also, excuse my voice. I'm feeling a bit of a cold coming through, but should be all good. So what are they actually? Now, in the market, you're going to realize this. There's actually times where some candles like this leave a complete gap in the market. And that's all this is, a void or an imbalance. Now, the reason we actually use the word an imbalance is because this price action right here, when price is buying up slowly, buying up, and then eventually just sells off aggressively, what this means is there was an aggressive amount of sell orders. This is something that we call an area of unhealthy price action. Therefore, it leaves a large up or down candle. In this case, it was the down candle. You see the black going downwards. The lower time frame in this area is extremely bearish or bullish. In this case, is bearish. As you can see, when you start to zoom into it, this is just an indication of what it can start to look like. You get very aggressive sell candles. And of course, you can understand this is all due to the institutions all selling at one time and putting heavy orders into the market. And that's exactly what order blocks is about. I've talked about in other previous videos, so definitely check them out as well. Now, the question is, okay, we've now identified it. What does it actually mean? Now, I'm just going to go back to this one over here. When you get imbalances or gaps in the market, eventually these are going to get filled. The reason is because it's an unhealthy area of the market. Therefore, the orders, they have to basically come back up to that area. I could be talking about it all day, talking about order flow within the market, how banks buy and sell and everything, but we're not going to get into it in this video. Simply, I want to get into how to effectively use it. And that's the important thing here. Now, let's look at scenarios where you can actually use liquidity voids or imbalances as targets. Now, let's just say, for example, you got into a lower time frame entry over here. You had your reasons. Let's just say fundamentals were looking for sells. And then in terms of, even just looking at this, I can tell why I even entered, simply because it was a double mitigation type of trade, started to sell off. You've got liquidity to the downside and then also this imbalance. So in this case, I've just marked it up with the orange box. Now, if I'm actually in this sell, of course, I need to plan out where am I going to take profits. And this is where imbalances are going to help you. Use the imbalance to understand where we can have a potential reversal point. What I'm going to try and do, I'm going to get this annotation tool. So we have this imbalance marked out over here. Now, what happens after an imbalance is filled? Usually what we start to tend to see is the order block that straight after the imbalance is very sensitive. What I mean by that is it may touch it and then completely reverse the other way. This is something that I kind of like to refer to as reversal points. Once you fill the imbalance, now the market is kind of free to be able to to reverse the other way. In this case, it didn't. It still continued. This is why we take profits. We take some profits over here, some profits at the next imbalance point. So you would have taken it just before this order block. That's your second take profit. As you can see, when we started to fill the imbalance, price started to retrace a bit. But of course, we still have, we're in a good position. Our technical analysis backs it. Our fundamental analysis backs it. Therefore, we're still looking for sales. And as you can see, price started to sell off completely. This is one of the ways that you can actually start to use it as targets. And what I'm going to do later on in this video, actually go through a live example that I experienced with my group pretty much this week. Then, how can we start to use voids or imbalances as an entry point? Now, understand what I've said so far. Price or imbalances is kind of like the gravity of the market. It's a weird way of saying it, but it's kind of like the gravity of the market. Price gravitates eventually to fill the imbalance completely. So if we got up to this point over here, it's not like we can expect, price may just slightly snip into it. No, eventually price will completely fill it if it's intended to go that way. Of course, fundamentals help it and everything, you're pushing it in that direction. But that's where we want. That's where we want to take profits if we are buying into that area. Going back here as well, how can we actually use a liquidity void or an imbalance as an entry point? Now, using voids as entry is a lot riskier than any other type of entry. What I mean by any other type is order blocks. But at times when price is very bullish or bearish, it may not always retrace back down to the order blocks. And I've experienced this in the past. Sometimes price may not go all the way down deep into the order block, but rather it just fills the imbalance completely. As you can see, let me just get the annotation tool again to really explain it to you guys. This is the imbalance. And why does it stop here? Because pretty much this is where the next up move happens. When you're looking for an imbalance, you really want it to be something like this. So let's just say it was there. We had a wick there and there. Your imbalance would be, let's just say from this point. So let's just say we saw this in the market. The imbalance is this. You're looking for the cleanest area where it's literally just sells. That's the imbalance. And that's what we experienced here. As soon as it started to fill it, it started to buy up completely. And that's the position you would have got into. Now, if you are waiting for some kind of order block, okay, some people might have waited for this. This order block right here, as you can, this black one over here. Mind that second line, the third line at the bottom. So it's the first and that second line. This is the order block somebody may have entered on. And as you can see, they would have missed. So personally, I've actually come to a point where now I don't always enter on just one specific order block. Sometimes it might be an area like this because I understand this imbalance has to be filled. As soon as it's filled, of course, you've got your other confirmations. You're not just going to enter on something like this. You actually want to buy it up fully. But yeah, that's pretty much it when it comes to imbalances. Using it as an entry point and also as a target as well. Now, this is something very clear. It might take some time to get used to, but once you start to see in the market, you'll actually start to realize, okay, where are the perfect entry points? Where are the perfect take profit points? And genuinely, if you keep this up, you're going to see your trading just excel and move to a different level. Of course, seeing this every day, you get used to it, you train your brain and everything. But yeah, guys, we're going to get into the live markets right now. I'm going to go through an example of how we actually use it this week and then how you can actually go through all of it. But before we get into that, if you get, obviously, this is one of the short lessons in the beginning, in the first part of my course, all about imbalances and everything. If you guys are interested, of course, all links are in the bio. All links are in the bio to take you to my website. And then, of course, you've got two different courses. You've got the one with the fundamentals and then the one with just technicals. Of course, Discord is included in both packages as well. And this is where we're actually going to be discussing. Now, when it comes to this week, of course, guys, with the Discord, just to let you know, every week we always do weekly calls, fundamental breakdowns, which is the thing that actually separates me from a lot of the other courses, educators, whatever. It's the fact that I use both technicals and fundamentals. It's not really something that's been seen much in the smart money concept field. That's why I've kind of got that understanding of the second side to the market as well. and perhaps the more important one as well. Now, with this example over here, Euro JPY, what we had planned, or what I had planned for the week ahead, was to start to look for some buys. Now, there were a few reasons fundamentally. JPY wasn't too keen on. We've been saying for quite a while their monetary policies very dovish compared to others. We're not going to get into that right now. But in terms of euro as well, I was expecting a bit more optimism because of the rate hikes that were coming. And in fact, today we just got 50 basis point rate hike. So that's long term, that's going to be quite beneficial for it. We're going to do a bit more research into it, see how it weighs in on the economy as well. But we were looking for these buy areas to take us to fill this imbalance over here. And then eventually, as you can see, planned out some of the trades, sent it into the entries channel. Just to let you know, whenever I do enter the market, I always send it into the entries channel. For example, you see EuroCAD here. Again, Euro USD was one that I got into recently. But Euro JPY is one that's planned and sent into the group. And as you can see, let's get into the charts. Okay, so let me break this down from the beginning. Let's go on the 4-hour. Now, when we start to look at this price action over here, just as a technical trader, what do you start to see? First things first that attracts my eyes is the liquidity at the top. So we know eventually we're going to be filling that. Then let's go down to the 1-hour. Of course, market structure is looking bullish. As you can see, higher highs, higher lows, higher highs, higher lows. Potentially now looking for a higher high. Then in terms of the 1-hour, what can we actually start to see at the bottom over here? Now we've mitigated this order block at an extreme level. Then what happened? Price mitigated that, broke structure to the upside over here. So we've got this structural break and this second structural break as well. As soon as price broke that structure, as expected, started to retrace downwards, down to a discounted area. Now you could have entered this on a 15-minute. Personally, I wasn't looking at Euro JPY at the time, but it would have been an amazing trade. But what we were looking at was particularly this level right here. A few reasons for it. All the blocks look very clean. Some kind of imbalance starting to form over here, eventually to fill and then enter on that area. But what my main concern here was actually bringing the attention to this imbalance over here. As you can see, let's just move that up just a bit. This imbalance right here is complete and utter unhealthy price action. Eventually that's going to get filled. Now, what my goal here is I need to get into the buy. And then when I get to this area over here, this order block here, as you can see, it mitigated before. So I was looking for a second mitigation to the downside. And as you can see, so let me just move that back down to how it was. Pinpoint accuracy, straight, it filled up the imbalance that I was talking about. I believe it's on the 4-hour. Yeah, it was on the 4-hour, the imbalance that I was actually looking at. But as soon as it started to fill that, you can start to see, where are we actually going to enter into the market? Now, I believe it was, when's that, 19th of July. So I believe that's Tuesday. Yeah. So I was looking for some kind of Tuesday buy, essentially. Now, price action was looking very good. Of course, we have the equal lows at the bottom, so we have to be careful of that. But in terms of the buy, this is what I was looking for. I believe, let's go down to the 30-minute. Yeah, this was the order block. Now, price was around here somewhere. What I wanted to happen was price to fill this imbalance right here. As you can see on the way up, it completely left this massive gap in the market. So I wanted to see price to sell down to there, fill that, but then ultimately to fill this area right here. And that is exactly where price took it up to. And then of course, today we had a bit of manipulation in the market, massive news on Euro, massive news on JPY as well. So it was risky in the market today, but you can kind of see how things are playing out. And this is exactly the way that you're meant to use imbalances. Understand where your entry points are going to be, where your take profit points are going to be, and your head is going to be so much clearer in the market. Of course, with this entry, we weren't able to get into it because it didn't retrace, but obviously no problem. Now it's coming towards the end of the week. What is it, Thursday? So we've got today and tomorrow. So what I'm planning to do is coming to the end of Thursday. So, after London close, I don't really want to be entering the market. Definitely, Friday we'll look tomorrow. We'll see if there's confirmations and then enter. if I do enter, like I said, I always do send it into the group. Personally got into this USD sale, which was quite quick. Wasn't able to send it at the time, but obviously 1 to 10 at the end, so it was quite nice returns. And I know a lot of the guys got into it as well. Simple intraday moves, really. But yeah, guys, that's pretty much it. If you guys have any questions about any of this, definitely reach out to me on Instagram. Please like, subscribe, comment, everything. Leave your thoughts in the comment section. And yeah, if you are interested again in the course, in the mentorship, we're now reaching up to 400 students in the group. So we're growing slowly, but it's all going well. But yeah, guys, if you have any questions, reach out, and then we'll definitely speak soon. All right, guys, take care. And I'll see you all in the next video.